Tonight, I want to talk to you about the concept as an investor looks at it, as a business person looks at it. So, last week, I shared with you the concept associated with its spiritual principle, the basic spiritual principle. If you missed that, feel free to go back, excuse me, to our Facebook page or to our YouTube channel, and you'll be able to connect up with last week. I showed you several scriptures that are associated with it. The most fundamental of them is Jesus Christ's teachings from Matthew chapter 25, where he talks about the talents that are given out, and he gives three different examples, three different people. Those people represent three different elements of capability and ability to be able to handle and to be able to utilize investments. And so the landowner offers to the people things that are talents, that are gifts, that are valuable, that are assets that they can use. And he gives it to them for the purpose of utilizing it to bring forth increase or return. And different ones handle it at different levels. So this is the fundamental basis of the law of investment, is the concept of taking what you have and investing it in order to gain a return back from it. It's a spiritual principle. In that particular chapter, it's talking about this as being as the kingdom of heaven. Kingdom of heaven is like this. And so even in our spiritual work, our spiritual efforts, we're sharing seed in order to reap back souls. But this concept is seen throughout all of nature. The very beginnings of nature, as it was created in Genesis, starts with the concept of seeds and multiplication. Seeds are, in essence, used in order to bring forth life. New life comes from seeds. Seeds have all the potential, all the DNA associated with creating new creatures, whether they be plants, whether they be animals. The seed is the key to reproduction and multiplication. And so God tells all the world back in Genesis, be fruitful and multiply. And he gives all the world a seed. He gives it to plants. He gives it to fish. He gives it to reptiles. He gives it to humans. All of them produce seeds, which then you can multiply, extend and multiply life. Seeds are the reason why life continues, because no particular animal or plant on earth lives forever. It reproduces through some form of seed, which is planted, germinated, grows, matures, and then reproduces itself in life. So it's a natural way to get more and to extend and to grow. And in the aspect of investment, it's the same concept. You have to take the seed and you have to do something with it. And from that seed, if you have a seed, and I'm here to tell you right now, all of us have a seed or seeds. If you use that seed, and we'll talk about all this a little bit more detail later, you have a couple of options when you have a seed. And it's a good seed. You can either eat it or you can use it, invest it. Either eat it or invest it. Eat it means whatever this is, I take it at value and I consume it. So whatever I've received that has value to it, because the things you get, things you buy, are things that have value. So whatever things that you get that have value, you have the choice of either consuming it, I'm going to use it for whatever I want to do, or I can use it for some form of growth or some form of return. In sales, and again, we're talking business mindset, we'll talk about this a little bit more at the end. If I have a store, a retail store, I am buying certain things at a certain level of value. I'm doing something with it, and then I'm selling it at a higher level of value. So what I receive, whether I bought it, somebody gave it to me, I inherited it, whatever, is the seed that I have. It has some level of value to somebody for something. And so I take that and I transcend that out and I get a return for whatever it was. In retail, I get it at wholesale price. I put a markup on it. I get it in the face of the customer. That may be the value I add to it. I may tinker with it, do something with it. I may take it apart and build something, and then I sell it to somebody else. In every manufacturing business, I'm thinking about automotive right now, there is some vendor that creates a part that part is not as valuable, it doesn't cost as much as the whole car, but it may be essential to the car. So there is a certain amount that the automobile maker will pay in order to get that part to add value into what it is that he's going to sell ultimately to a customer at retail. And so every time there's a transfer, this is a part to this, which goes into this, which goes into that. Every time there's a transfer, there's an increase in the amount of value it has. If somebody tries to sell you a doorknob, what are you going to do with the doorknob, right? Doesn't have a lot of value to you yet, but it has value to somebody that's selling a door to you. And so they buy it, they add it to the door. Now the door has enhanced value. The doorknob is offering value because now I have a whole door that I'm selling to you. Now, if I sell that door to somebody that's building a house, right, the house has more value than the door. And so there's always this concept, and again, this we're talking about this from a business concept tonight. There's always this concept of taking what you have, think of it as the seed, and then applying it to get a return from it that's greater than the value that it has to you initially. And so this is the whole concept and has been for generations and for hundreds and hundreds of years, just the basic concept of trade and exchange. I have something, you have something. You have something I need, I have something you need. So we exchange value. What I have, the seed that I have, has more value to you. I give it to you. You give me something back, which has greater value to me. So from my perspective, from each of our perspective, we've increased the level of value in our lives because I have something that I've got more of it. I don't need it all, so I can share it with you. It has less value to me because I've already got more of it, right? I can produce it again. And you need it, so I give it to you. You've got something that I need has more value to me, so we exchange it. That exchange of value is the concept of sowing something and then reaping. So all throughout the business world, this concept is almost natural. It's almost not even thought about too much. But if you go to business school, they will teach you this same basic concept of, in terms of a business, how do I add value? Now, for those who don't know me directly or just watch, where am I coming from with all of this on the business side? Not only am I a pastor, I've been a pastor now for I think it's 3 years, 22 years, I guess it is. But I've been in business for almost the same amount of time. I have a master's degree in MBA and also a chemistry degree. I work for companies, still work for companies, now professionally as a chief operating officer. I've been managing companies and supervising for years, 15 at least years as a manager, plus another 10 years probably as a supervisor. So I've dealt with businesses a lot on long term. And so I just want to say that so you understand as I talk to you about this from this vantage point, I'm talking about it from both training and experience. So hopefully this will help you to be able to take some of this and utilize it. I want you to be able to utilize it for what God wants to do with you. I'm an adamant believer that there is a blending in terms of the spiritual and the natural. God made everything that's natural, right? And so there are natural laws that God put into place, and they're built upon in everything that we do and in our society. So in this concept of investment in business, good evening, good evening. I see some more people coming in. Good evening to you. Glad you're joining us tonight. We're talking about the law of investment. And in this concept of investment in terms of business, the concept is still the same. We sow something in order to reap it. We take something that we have and we sow it so that we gain something back. In business terms, you think of it as investment and return. In sowing and reaping, I take a seed that has a certain amount of value, I take it and I return back from that more. I get increase from what I sowed. First, in terms of the seed reproducing more of itself. And then second of all, I sell the seed, I trade the seed, whatever the case may be, and I get something else valuable in return for that. So there is this concept of sowing it and reaping it. If I am a farmer, Not only am I taking the seed and quote unquote sowing, planting it, but I'm spending my time, my energy, my effort into nurturing and growing that seed into something that's going to have some value to it. It's going to be a plant, it's going to be a fruit, it's going to be a vegetable, whatever it's going to be. Ultimately, I'm going to gain something from that because I sowed it in order to get something, to get it to grow and get more value. Now I take it and I sell it, whatever the case may be, use it to build something, make something, and then I get I reap from it. So investing in return is the same concept as sowing and reaping. I take what I have of value, I invest it into something that is going to bring a return back from what I got, what I put in it. Hopefully, it's going to bring me back more than what I invested. Now, it's always a risk in farming. It's a risk, right? Because I want this investment to go well. Some farmers have some bad years, right? You have bad crops. This year, we're actually just getting to planting in our garden at the church this week. Why? Because a few weeks ago when we went to ready to plant, there was a frost, and that frost killed a lot of the plants that we were ready to put in the ground. And so as a result of that, it delayed everything. So there's an investment there that got impacted by that. You know, what that means is we're not going to be able to get as much crop and value out this year as we'd like to. I have friends that are farmers in different parts of the world, and we talk about the challenges and things they go through. Every year is not a good year. Every year is not a bad year. Every year is not a great year. It varies. And so that's the investment they make in time and in money and work to try and manage it and maintain it in order to get the best return out of that they can get. And it may vary. Business world, investments are the same thing. We're going to talk about that because when I invest, right, I try to do everything I can to be successful, but everything can't be guaranteed. So let's break this down a little bit. So every investor sows some given amount into something with an expectation of some kind of return, some kind of increase. It may be an investment into starting a business. It may be an investment into the stock market. It may be an investment into buying an existing business. Whatever level it is, there is an investment. I may be wanting to start a shoe shining shop on the corner. I got to buy the stuff I need to shine the shoes, right? There's an investment there. Then I got to put my time in being out there. I got to be in the right place. I got to find the right clientele. All those things are part of investing into the business world, whatever type of business you're approaching. You have to start with something, right? And move. So the first thing you need is a seed. The seed is whatever investment you're going to make. The seed could be money. Excuse me. The seed could be time. The seed could be learning. I need to figure out some things. I need to, a lot of businesses, trying to think of the right term here. For any business you're going to get into, there's a certain cost associated with getting into that business, right? Whether I have to buy a shoe shine box, whether I have to buy a building, right? Whether I have to hire employees. There's certain costs associated with getting into that business. And some businesses are easier to get into than others because of the costs associated with starting up that business. Now, there are others where it's not so much cost, but it's learning. I have to know enough about this to get into this business. I have to be competitive. I need better understanding. I need a deeper knowledge in what it takes to do this and do this in a certain way, right? All those things are part of what you're doing to identify your seed. The knowledge you build up to do this, that's seed, right? In being involved with Kenya now for 5 years, I've built up a certain amount of knowledge and understanding in how to approach other countries and how to reach out for ministry in other countries. That has been hard, painfully learned experience that actually now has value because there are other people that now approach me about ministries in other countries. How do we do this? What do I have to deal with? Well, you're going to have this kind of problem. You have to understand this. You have to understand this about the culture. You have to understand this about the government. It's because I invested time to gain that knowledge. That knowledge now is my seed because it's a value of something that can be taken and invested to reproduce something else somewhere else, right? So money is not the only thing. I'm hoping that I can broaden you to look and see that you don't have to be a multimillionaire to be an investor. Every one of you, every one of us has something that you can invest. It could be your knowledge base. It could be what got passed on to you from your grandparents. It could be some skill that you have, your ability. Maybe you're a singer. Maybe you're a piano player, a musician. Maybe you're an artist. People who are into sports have a natural seed that they then build on and enhance, right? I'm a gifted runner, or I'm strong, or whatever the case may be. We all have some element of seed that you want to take and learn how to invest it so that it brings back a return. The whole concept is take my seed, invest it, get a return for it. It could be your knowledge, it could be your skills, it could be arts and crafts that you're able to do. It could be work that you're able to do with your hands or with your mouth or with your mind. We all have a seed. Just like the Bible tells us, every one of us has a gift. Not just a spiritual gift, but you are gifted with something from God. And I tell people typically what people will pay you for to do is something that may be your gift. Now, there's some things that they'll pay you and that anybody can do it. So they'll pay you what everybody, just another person come and do this. But things that you can do and do uniquely, better than everybody else, quicker than everybody else, easier than everybody else. Typically, that's a sign, indication of where you're gifted. And you can take that gift and use it as a seed to invest it into something to gain a greater return. So you take this seed, whatever it is it's going to be invested, now you're going to have to invest it somewhere. And there, as I was saying earlier, there's a risk reward associated with this, right? First thing I want to understand is what's the likelihood of success for this, right? How much of an increase can I get? Is it just minimal? Or if there's something over here that I can take this seed or another seed and do something with and get a larger return out of it, I may be settling and doing this, and this gets me enough to get by, when realistically I could take my seed or a different aspect of my seed and do this over here and make a whole lot more. I'm dealing with someone at work right now who just left working for a company full time, and now they're moving off to be a consultant. We're looking at hiring them. I can tell you that the opportunity as a consultant can be much more rewarding than working for one company. But there's a risk reward. If I'm working for a company on a steady basis, pretty comfortable, I've got a steady income. As a consultant, now I've got a risk because I've got to find clients. But if I can find them and they're willing to pay for me for the value of my seed, I can actually make more in doing that. And I have experience working with people that do both ways, right? So I want you to understand, you have a seed. There is some risk and reward associated with it. So your plan may offer a little bit of both. I'm going to do this, which I know is more steady, and I have that dependable, but this is going to enable me to take a risk of doing this with this other seed. That's the same concept that people use when they invest in the stock market. That's why they tell you don't just invest in one stock, because this one may be too much risk. But if I can have a steadier one, now let me talk finance for a minute, like a bond, right? A treasury bond or a CD, which is kind of guaranteed. You put it in there over X period of time, you're going to get X% increase on it. That's a level lower risk type of investment, but it's also lower reward. If you want to get faster, if you want to get more money for that same seed of money you put in there, you may put it in something which is more high risk in the stock market, and it may do, like, let's say Bitcoin, right? And so now it can do really well. And while your CD is gaining, 4% now, maybe, your Bitcoin could jump by 100, 200%. But it could also flip on you and you end up with nothing and you lose everything you invested into it. Higher risk. So you can have a balance of these two where I'm going to put X amount in stable things over here because I just want to make sure I have something, but I'm going to put Y amount over in higher risk because the reward aspect of that, the potential is great. And so, what you do with your seed, how much you risk it, how much you'll take to do, is a decision you have to make. Some people jump out the boat. They say, I'm quitting my job. I'm going to start this business. Here we go. So, I'm taking my seed elsewhere. But the risk now is it's all on me. Do I have the ability to handle everything associated with doing this myself? If I do it myself, all the money is coming back to me versus going to some other company. So, hey, great reward, but there's risk associated with it. So we'll talk about that a little bit more in just a minute. So you have to be able to assume, first of all, that if you're going to do this, if you're going to take your seed, put it somewhere, especially with more risk associated with, you have to assume that you may lose some of it. And so you'd never want to put more of your seed into something high risk than you can afford to lose, right? I made a rule a long time ago never to lend money to somebody or something that I couldn't afford to not get back, right? Because if you look, think about the stress. You lend somebody money, right? And now, okay, they're supposed to pay you back, but they didn't. And you needed that money to pay your rent. And it's getting close to the end of the month. When you going to pay me back? You told me you pay me back in a week. It's been 3. I need that money. Yeah. Now, if they don't show up, you're in trouble. So you've risked more than you can afford to lose. So in the things that you do, you want to make sure that you are balancing the risk associated with it. And you have to have that assumption there that what happens if I don't get this all back? So the receiver of the seed, I take my seed and I'm putting it in something. Are y'all with me so far? Are you still with me? Okay. I'm going to take the seed that I have. I'm going to put it into something. I'm going to invest it into, that's the ground. So when the Bible talks about taking your seed, putting it in good ground, that's the ground, whatever the investment that you're putting it in. So how reliable is the investment itself? We talked about risk associated with taking my seed and doing something with it. Now I have to measure how reliable is this investment? Is it trustworthy? Is it something that has demonstrated that it works, right? And here's kind of the risk. People say like, hey, you can be the first one in the boat. You can make a lot of money on this, right? Well, that's risky because is it proven yet? On the other hand, if it is proven, it's going to cost you more to get into it because whoever you're investing it in or whatever you're investing it in is probably going to want to give you less of it back because it's already proven. When Chick-fil-A came to Rochester, and there's all kind of businesses that you can buy into, right? Franchise businesses, they sell you in essence a model of something that has been done elsewhere and made money. So now they say, hey, take this business and we'll sell you, allow you to be able to run this business. We'll take a commission from it because it's our concept idea, patented, whatever. But we'll give you everything you need to run it like we did. And hopefully it'll be successful for you like it was for us. Now there's risk associated with that. There are some businesses that come through from time to time and they're new businesses, they're not proven out. So it may have worked somewhere else. Is it going to work here? Can you manage it well enough to make it work here compared to where it worked before? There's risk associated with that. There are other businesses that come and they've worked all over the place. I remember when Chick-fil-A first came to Rochester and several people, yours and truly as well, we're thinking about, should we get into buying this Chick-fil-A, right? Because it was raging all over the country. People were telling me that had it, and best chicken we ever had, nothing's like it, blah, blah, blah. Okay, proven record. Okay, you go to invest in it, and the investment cost is very high, and the restrictions around it are very limited, right? It's a very exclusive club to own a Chick-fil-A. Why? Because it has been so successful and they expect it to be successful everywhere it goes. So you have to meet certain requirements just to have the opportunity to buy in it, and the cost associated with it is higher because of the fact that it's proven. So the ground that you're putting in this in is going to make a difference. Are you taking what somebody else has created? Are you creating your own thing? If you're creating your own thing, has it been done before? Okay? If not, How comfortable are you that it's going to work? That it's going to be successful, that people are going to see the value, and we'll talk about that a little bit more in a minute. So now I have to decide how good the ground is. If I'm investing this in a person, somebody tells you, look, I want to start a business. Can you give me something here to help me out? How comfortable am I with that person's ability to bring a return? If you are a joint investor in a business, right? Somebody starting something, okay, I'm going to give you a certain amount of money towards it. So I'm an investor now in your business. I'm connected to the success of your business. If it does well, I get more money back. If it doesn't do well, I may lose my money, right? So how reliable, how much trust do I have in the ground that I'm putting it in? You have to take the time then to evaluate, to measure, to find ways to determine, is this something that people want? If this is handled well, will it do well? Does this person who I'm giving the money to that leads this, do they have a proven record? Do they know how to manage a business? Have they ever done anything like this? So all these are things that you have to consider in terms of the ground that you're investing into. And then what's the anticipated increase that I'm expecting from it? Is it a large amount? Are they promising the world? Is it a relatively small amount? What is it that I would expect as to get back? So all these things are measured in the decisions that you make. Remember, the reason for investing is the expectation of getting a greater return. In that scripture that we saw in Matthew, the Lord that was giving out those talents to people was saying, okay, what are you going to bring back from what I'm giving you? It's not yours, but I'm giving you this to work with and bring a return back from it. What are you bringing back? And so 2 of them brought back double what they started with. Well done. The third one brought back nothing but what he started with. Now, in the concept of investment, to only make what you had at the beginning is a waste. Because, and you saw this in the story, I could have taken the 1 talent I gave you and gave it to that guy that had 5, and he would have made more with it. Instead, I gave it to you, and all you did was sit on it. We talked about this a little bit last week, because a lot of times we feel, now we're talking business, right? That I'd rather keep my cash with me. That's a conservative approach. I'm going to keep it in my mattress. I'm going to keep it in my safe, and I know it's safe there. But the reality of time is that over time, the cash that you have, whether it's solid or whether it's coins or whether it's dollars, is losing value over time just sitting in one place because of interest. Because that $5 that you save today is not going to buy 5 years from now what it will buy today. It's going to take more than 5. It may take $6, $7 to buy. Think about the price of gas. Some of us been around a while since gas was in the dollar something range, right? Or less, right? Now it's almost $3. At times it's been almost $5. The price of everything goes up. The price of food goes up. All this we hear about inflation. If you're just hanging on to those same dollars over time, they're losing value. So the man that had 1 talent and took it and hid it, buried it, and brought it back, essence lost the opportunity for value by holding on to it. So the question is, where do you put whatever seed you have? Listen, if you have a talent, a gift, and you're not using it, your seed is losing value. And what we know about most seeds is they only last so long. Over a certain period of time, they'll no longer reproduce. And so it's important for you to assess the seed that you have, and then how am I going to use it? And my intention, I need to get increase out of this. I don't want to just hold it, right? If you put money in the bank and you're a millionaire, billionaire, and you're just holding on to that money, what good is that, right? It's got to be somewhere gaining interest. So most investors are constantly looking for a better place to put their value, their money, their assets. They think of money as assets. So I'm looking for a better place to put it. Why am I going to stick it all here, right? Well, because it's not doing anything. Over here, I can make more money with it. So let me take this and put it over here instead of keeping it where I had it. This is an investment mindset that I want you to gather. Think about the things that you have that you're not using, right? Your home is gaining value over time. right? Should be. And if you're doing certain things in your home to maintain it, to enhance it, that is an investment, an asset that is gaining value. However, if you don't own a home, if you're renting a property instead of owning it, then all of your assets are going out and not really gaining anything for you. They're just sustaining you. Versus if you own the home, even what you're paying for the home, the value of the home itself is increasing. And the more you pay on it, the less you owe on it, the more value, you're gaining an asset. These are the ways that you get long term value. This is how you build your value and your increase over the course of time. Putting money in things like stocks, things like that, your 401k plan. Yes, there's risk, more risk associated there than in some areas, but those are the types of things that will give you long term. Now, I heard that, I hate to say it because everybody gets wound up just saying the name, but I heard that President Trump had made a suggestion that every family, when you have a child, get a certain amount. I think it's $5,000, $1,000, whatever. Every family has a child gets an initial credit that then can be put in some kind of a market. Now, the concept of that is that over the course of time, with 5,000, 500, 100. By the way, one of the things you should always do, and I got this first of all from my father. He did it for us. When you have children, first thing he did was he set up life insurance policies under the kids. Other thing you can do, other than that, is create a bond. Create $100, whatever it's going to be, and then put it somewhere like a CD or something like that, and allow it to continue to grow over the course of time. You need to understand that with that kind of, for example, $5,000 that you start now as a child, by the time that child reaches college, the kind of money they could have made off of that compounded interest could go a world's way towards paying for any schooling that they're going to go to. But you got to put it somewhere and allow it to compound and increase its value over the course of time. An investor thinks in terms of that, not just immediate, long term. You've got to set things up for the long term. So every investment that you make has to be measured against risk, right? Insurance companies calculate the statistical risk or odds of you having some kind of a mishap. And so they take the average, they get all kind of data of millions of people and situations and say, okay, the average person driver out of all the millions of drivers out there, average person has an accident once every X number of years. And they break it down in this age category, in this community, et cetera, so forth. They take all those statistics and then based on those risks, then they charge you something that they know is going to be more than the likelihood they're going to have to pay you for an incident, especially for a major one. And that's why with insurance companies, if you have a couple of major ones, guess what? They get you out of the pool, right? Because you're throwing off the stats, right? And so ultimately the risk is higher. They either need to raise your rates to cover the higher risk, or they need to get you out of the pool, right? So insurance companies are always charging more than what you're ever going to use on a broad basis, on the average basis. So they're making money because they're charging people overall more than what they'll ever have to pay out typically. Now that is something that they calculate. They calculate the risk and they do associate. Now this is why it's always in terms of insurance. If you can self-insure, if you truly have the funds to cover it yourself, then you're typically going to be better off doing that. The reason we have insurance is so that we don't have to come up with some huge amount when at the immediate time something happens. So in essence, you're paying more along the way for in case something shows up. But if you can afford to deal with an incident that takes place, because I have excess money around, I have excess cash around, you're better off just not having the insurance. Now, when you get to things like a house, and a house burning down, it's a lot of money. So you probably don't want to have insurance, right? Some people can't, depending on the type of car that you have, it may cost a lot to get that car repaired. Insurance costs are going to be higher, but that's why you have the option of a deductible amount. Because if you agree, okay, if I have an accident, I'm paying more up cash up front, then their risk goes down of having to pay something more. So they something higher. So they reduce your rates, right? If you can afford to do more yourself, you do more yourself. You pay less to them for the emergency of something happening, which may never happen, right? Hope this is helping you. So all these investments have different measures of risk. You have to associate different issues, different environments, different ages associated with it. That's what all the insurance companies are looking at, right? It's important that you then know how to do the same thing. Look at the situations happening in and around you when you and what's happening with your seed and use it wisely. Don't just leave it somewhere. You may have a talent, a gift that you're never using, and you're not using it to actually bring anything back. Well, that's a problem, right? That's a wasted seed. Don't waste your seed, right? I have some people work in a certain field when they have talents and capabilities in another field that they never use. That's a waste of your seed. So you may be doing certain things, as we said, on a conservative basis. I'm doing this to survive. I'm working this job to survive right now. But you need to look at what seed you have and how you can use that seed to gain something better than just surviving. Your survival seed may be okay for now. We talk about when your concept of seed, we can do a couple things with it. I think I mentioned earlier. You can eat it, you can consume it, or you can invest it. So there's a certain amount of your seed that you have to consume to survive. But there's another element of your seed that you use to bring about increase. And so balancing that, how much do I need to survive off? That's why you see some people that decide, you know what, I'm going on very, very low income level right now because I want to invest into doing something that's going to gain me more in the long run. So I'm doing no frills, right? I'm not buying a whole bunch of stuff. I'm not going a bunch of places. I'm living simple because I'm taking that money. If I'm just taking that money and I'm just consuming it anyway, it doesn't really add any value. But I'm holding back on the spending so I can get more money, so I can gain seed, so that I can invest it somewhere else to produce a higher return. This is the mindset that I want you to grasp. This is what I want you to take a hold of, is how to take what you have or what you're receiving and how to redirect it so that you're gaining from it and not just consuming it. That is the key. Don't work just to consume. If you're working, work so that you consume a certain part. Every farmer knows I got to eat a certain part of my seed, but I got to use the rest of it to reinvest. I'm going to have to plant it. I don't have to buy seed every year. I want to take what I gain this year and replant it and then get more. And then take some of that, eat some of that, take it, get more, and expand myself in that way. Every farmer understands this concept. Ladies and gentlemen, each and every one of us need to understand it in your practical life. How do you take this from the seed that you're getting and don't consume it all, but take some of it and invest it? Eat a certain part, invest a certain part. Technically, you should eat a certain part, you should give a certain part, and you should invest a certain part. So I have a baseline amount of stuff here I need to survive with. I have things that I want to do to help other people, other situations. I want to bless God and honor God. I want to give a certain part, and then I want to have a certain part left that I'm going to invest so that I can gain even more. Okay? This is how the concept goes together. So expanding in your investment, take from your term and reinvest it into something greater. Invest your skills in your job to get money, right? This is what we do now. You're taking whatever skill set you have. You're going to a job, somebody's paying for it, right? That's because you have a certain skill set. And the better you are at that skill set, the more somebody's going to be willing to pay you for doing it. They don't always pay everybody the same amount. They like to, but if you can do twice as much work as this person can in the same amount of time, you have higher value. So I'm going to give you the raise, right? I'm going to promote you. This is this whole concept and where it comes from. So your skills, your gifts, Bible says make room for themselves. right? Your skills and your gifts are the opportunity to bring yourself back more increase, right? Use your increase to invest in yourself. So we talked about you can have a certain amount of time, which is investment, for a certain amount of time. Now, first of all, there's a difference between investment and hobby, right? And hobbies aren't necessarily expected to bring increase. So there are things that you do, right? I learned to play the guitar, and I just enjoy playing the guitar, right? That's a hobby. But if I learn to play the guitar and then now I'm playing it in a band, I'm playing it and performing, okay, now I'm getting increase for that. That's the difference between investment and hobby. There are some things that we do that we do them as hobbies, but they actually could be investments because it's a skill. It's part of your seed. So how can you utilize that? Some things you may want to make money off of, some things not as much. There's investment, there's hobbies, and then there's ministries. Ministries are investments. Ministries are investments which bring rewards in the spiritual kingdom. We don't minister just as a hobby for nothing. We minister as well because we want to see a return. The return is in the kingdom. And so it may or may not be something you directly see. So we gave out those packages, I said at the beginning today, to all those men just today. And later this week, we gave out those packages to men. It's part of ministry, right? It's to bring a return. The return may be blessing that person's life. The return may be helping them to turn their life and mind around. There's a blessing in the kingdom. Just like in Matthew 25, it was talking about the kingdom of heaven, which means what they were taking from the Lord or from God in talents, they were then turning and reinvesting back to the Lord or back into the kingdom. And so ministry is not a hobby. Ministry is an investment in the spiritual kingdom. We may see it directly, we may not see it directly. It may happen impact indirectly. We minister on television, we're ministering right now on live stream, and may never see the people that we're ministering to. But hopefully this helps somebody to the point where they then are able to bring forth more increase, and this is work in the kingdom. Right? Okay, a couple last examples here. We're almost done for the night. Banks, skillful investors. I take this to a whole nother level of science. As an example, banks make money by lending money. So they take the seed that they have, the money they have, and they lend it to people. And in return, and they get a return for that, which is called interest. It's a concept of sowing and reaping. They give somebody, okay, I'll give you money, and in return for that, you're going to give me back X% of the value of what I've given you. The longer you keep it, the more interest you're going to have to give me on it because I'm lending it to you for whatever investment, whatever you're trying to do, right? They've made a business out of the concept of sowing and reaping, right? So any bank, when they do this, they have to first evaluate the level of risk. See how this works, right? Credit worthiness. Are you trustworthy with what I'm lending you? Because I'm not giving it to you for free. I'm not giving it to you not to not get it back. I want to know whether I can trust you enough to give you this. So are you good ground? The bank is looking to find out if you are good ground to put their seed in. Because they're hoping that if they put seed into you, there's going to be a return on that, which is positive. They don't want you to lose it. They don't want you to be unsuccessful. They want you to be successful. Because if you're successful, you're going to pay them. Not only pay them back, but pay them interest. And if you're good, then they'll be like, keep it. You want more? I'll give you more. Why? Because it's my business. The more you have, the more interest I'm making. And so when they find people, and when I teach finance courses, I tell them this all the time. When they find people who are good with the money that they give them, they're more than willing to give you more, right? That's why you have people who have credit cards and you do all those credit cards and all of a sudden they send you something else saying, hey, we'd like to offer you this credit card. Because you've done well with the investment, now they want to give you more so they can make more off of you. And they want you to see you do more things with it. Don't you want to build a patio? I'll tell you, on your house. Don't you want to fix something in your house? If you're in a business, don't you want to grow? Don't you want to expand? We want to offer you money to help you expand. It's a business. I'm sowing into you because you're good ground. You've demonstrated you've done well. And so as a result of that, now I want to give you more so we can get back more for you. That's their business. It's a business model. The banks are into minimizing risk. These are all things we've talked about today. They minimize risk. So are you credit worthy? Number one. And number two, if I have some question about you, I may minimize the amount I'll give you, right? Because I can only trust you so far. I may raise the interest rate. And the reason I'm raising the interest rate is because there's higher risk that you're not going to pay it all the way through. And that's why businesses also do front loaded interest, because I want to get the interest out of you now in case you do this for a year or two and then you're like, I can't pay the rest, right? I've already made my money off of you. And so they're managing the risk. If they really don't trust you, you may have to have collateral, right? And so your car is collateral to a loan that they give you against that. If you don't pay the loan, I got your car. Your house, the same thing. Collateral helps minimize the risk to the bank and the banker. Co-signers, right? I want to have a co-signer because I don't really trust you. You're not credit worthy. You're not credit trustworthy. So I'm going to trust them. You'll never have somebody sign as a co-signer to you that has worse credit than you do. They'll never accept it. They don't want two people with bad credit. They want one person that has better credit than you, who is more reliable or trustworthy than you demonstrated, so that if you don't show up or come through, they go to them because they're on the hook for it as well. So all these things are the bank running this business of sowing and reaping, right? So they have predetermined returns because they set the interest rate. So they know what the return is going to be from what they invest in you. So business, right? And they claim the rights ahead of any joint investors. If you have something and more than one loan out on something, then you know what? They want to make sure that they have the rights versus them. And they have a bank is different from an investor in terms of legal aspect, because if you have an investor, they're actually part of the business, so that when you gain money, how much they get back depends on how well you do. Banks ain't doing that, right? Banks are saying, I'm giving you a certain amount, and whether you do good or bad, you got to pay me this amount back. They're a different type of investor to you. They're not a joint venture, joint investor in your business. And so these are ways that they utilize the concept of sowing and reaping in a business perspective. And if you understand these things, you understand how to deal with them, and you can understand how you can apply it in your own aspects of what you're trying to do on your end. Now, very quickly, a couple other types of businesses where this concept of sowing and reaping and investing in return tie in. Stockholders, right? You put your money in stock, right? You're providing investment cash not just to the market, but to a business. You're buying and investing into certain businesses. Unlike the banks, who are not committed to what you make or lose, they're committed to, I'm going to give you this, and you're going to give me this much back. When you're a stockholder and you're going in a 401k, or you're going into the IRAs or these trust funds, then you're putting money in that is actually going into some business or businesses. And then you're dependent on how well those businesses do to determine how much you're going to gain back. As the value of the business grows, then the value of what you've invested grows. And so that a stockholder is investing, expecting some form of return, and there's various levels of risk depending on the type of things you invest into. Landlords, they're using their assets to generate a return. If you have property or assets, you really should be thinking about how to make them add value and bring back return to you. Some things are difficult to do that with. Cars, for example, are very difficult because cars wear faster than it costs you to pay them. A car is always degrading. Houses typically increase in value over the course of time because of the market and the competitive need for them. Cars, not so much, unless you take your car and make it something like a rental. I know people who have taken cars, purchased cars, and started their own rental business, right? Again, risk versus reward. I'm going to rent you this car, it's going to cost you X amount, XYZ, right? You got to cover your own insurance, but I have it. Now, Airbnb is the same concept, right? I have a home, right? I'm going to make an asset out of it because I'm going to let somebody come and stay in it and pay me for it. I got to measure the risk. I got to understand how trustworthy this person is coming in my house. Like I have to have means of doing that. But I'm taking my asset and I'm getting value out of it. Now, even with timeshares, there's some timeshares that you can rent out to somebody else. So I've got this space, I can rent it to somebody else, especially if I own it, right? And now I'm generating value out of my asset. Okay? Service related businesses, right? People who have a product or a service that they sell at a markup to somebody based on value. I am sowing it out there and I'm reaping a return from what I do to you. And I'm doing whatever I have to do to get the seed. I'm adding value to it. I'm selling it. I'm putting it out there. I'm giving you the service and I get back. Workers are the same thing, right? When you work, you have a certain set of skills. You are investing your skills into that business. That business is paying you for the work that you're doing. They're taking that on and they're gaining more value from whatever piece of that you offer to that business. Even from everything from cleaning the business to working on the line. Whatever you do, what I want you to understand is you do have seeds. This is what I want you to think about and understand. You have seeds to be sown. How you're sowing them is the key. You have abilities, you have assets, you have things that you can take and use and get a return from them. And you need to start thinking about the things around you in that mindset. What assets do I have that I can gain value, that someone can gain value from? Because all those things that can give you a return. I want you, as I'm just closing, just about at the end of this, I want you to keep this in mind. Look and start thinking. We're going to talk in a couple weeks about an investor's mindset. Look and start thinking at things around you, gifts that you have, abilities that you have, and what is the value that they offer. Because from your gifts, there's value that somebody wants or needs, and that's your opportunity to sow it in order to gain a return. Be like the wiser man with the 5 talents that took each. Now, he didn't take all 5 of those talents and necessarily put them in the same place. He put them in places according to the asset that he had in terms of the value that he could get back for it. It's not always in the same. I take him 5 and give it here and give me back 5 more. I've got 5 talents I can use 5 different ways. And each of those is able to bring back a different type of return. So think in terms of what gifts has God given me that I can then take and use. And what am I taking in now that I'm consuming, but I'm not using it to get a return? I'm consuming too much of my seed, and I need to consume less and reinvest more. So take from your return and figure out how to reinvest it. Don't eat it all. Keep your investment seed separate. This is one last thing I do want to give you, and I really want you to keep this in mind. Keep your investment seed separate from your feeding seed. Whatever you have coming in, if it's cash coming in from your job, I always take a certain amount. Just looking today, I take a certain amount out of my paycheck. Before I touch it, it goes into a bank account. Never see it. It's a separate account. Happen to look today and see what the level was. Oh, it's getting up there, right? I've done this over many, many years, and I've always take a certain amount out of my every paycheck, goes into a separate account, out of sight, out of mind. Don't leave it. The last time, a few years ago, one of them got to $10,000, just taking a certain amount, $100, whatever it was, out a paycheck, putting in this account automatically, walking away. When it got to $10,000 in the savings in that account, then I took it and I put it in a CD. I put it in a CD for a year. And in the CD now, it's gaining more value than it was sitting in the account. But being able to don't eat all your seed and keep your investment seed separate from your consuming seed. As you receive it in, split it out early. Because if you keep it in one bucket, if you don't get anything else tonight, get this. If you keep it in one bucket, sooner or later, you're probably going to spend it on something. Ooh, I need some new pair of shoes. Ooh, I found this. Oh, I got some more money. Let me spend it. Keep your investment seed separate from your feeding seed. Take it right out from the beginning, just like you do with your tithe. Take your tithe out from the beginning. Tithe is supposed to be on the first. So you don't want to spend everything to see what I got left and see if I can tithe. That's not the concept of tithing. Take the tithe out first Give that to God. That's priority in your relationship with God. And then balance what you need from what you have left. Take your feeding seed out right at the beginning. Let your consuming seed be in one place. And then you spend from that, buy from that, do whatever you can, take the rest. Now, this works regardless of where you are in the chain. Whether you are multimillionaire rich or whether you are just starting on your first job. I started on my first job learning to separate out like that. And when you do it from the beginning, just like we were talking about earlier, if you have a child and you give them a certificate, $100, whatever, as a baby, you put that in an account, let it grow. Over the course of many, many, many years, it's going to multiply. By the time they're 18, 21, that's going to be something significant. But you've got to allow your investment seed to stay separate from your feeding seed. You start a business, don't, I tell this to people in financial classes, don't mix your business money with your home money. Keep it separate. So there's a few things I've given you tonight that I hope that you've taken and really take to heart. Now, next week, we're going to go into more aspects and move from the business world back into the spiritual realm and the natural realm and the practical aspects. We got several more things to talk about.